I think we're Gucci, yeah? Think we're Gucci. Think we are fucking Gucci. Just double check this thingity bang bang. Are we Gucci? Are we Gucci? Okay. Well, the next question is going to be, does this thing start disconnecting again randomly or not? Oh. Or not. We'll worry about that in a little bit. For now, let's kind of get this thing going, update our levels, post this thing in the Discord. And we'll kind of get caught up from where we left off, right? What should we call this? Waterfall? Question mark. Are we able to start waterfalling down here? Or no? We're not. Got some Skeller, a little bit of a throwback. Update our levels. Then we'll start yapping, yeah? Start yapping away. Blah, 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 blah. Yapping away, boy. Boom. 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 I'm so stupid, I just closed my exo. Actually brain dead. Six 63715. Okay. Six 4 5 1 8. Okay. 64 800. The POC 642. How much does that differ from this? Seven. Okay. Okay. Lower this a bit and then we'll start nerding out. Start yapping. Where do we get off? Where did we get off? $8.4. Is that right? Did we stream that 8.4? Oh yeah, okay. 8.4, 8.4. Yeah, I mean, it didn't really miss a whole lot, right? Basically, we were just balancing out the negative point of controls on here. Where's this thing? Kind of grinding up slowly every day, just ding, ding, just kind of making our way up. And then we got this motherfucker, which is interesting, right? We didn't get this sweep on perps or anything. This was like a CME only sweep that we got. But then when futures resumed yesterday, everything swept, right? I think both spot and perps came up here and spanked this wick. Pretty massive SFP, right? Been down only ever since. I mean, in terms of just this move, right? We did talk about this, right? So whether you took like this initial short, this one would have been tricky, right? This one would have been quite tricky. Like if you put your stop break even or like didn't shave to get your stop up here, this would have been a tricky one. Because like we came up, swept like the poor high here, and we swept this wick. So like if you got filled up here, okay, you got pixel perfect juice. But if not, if you got the retrace, like got filled on this thing, then like this one probably would have got you, right? The second ding. Yeah. But if you did take this breakdown, you could have done this as well. When we start to break lower here. But yeah. I mean, other than that, not particularly interesting, right? Nothing particularly interesting happening on this side of things. It's looking relatively weak, right? We've been talking about this. And like, the thing is, wasn't for a lack of effort, we'll say that. Because if anyone's been paying attention to the order book, there's been massive sells that have been getting filled here. We're talking like thousands of Bitcoin at like each level. So like there was a lot of buying pressure here and just fizzled out ever since the futures resumed. Let's get caught up on some data. So right now, not like looking like a particularly strong reaction down here, but if it starts to going from here, then okay, so be it. Well, let's kind of get caught up with how everything is looking data-wise. And then in terms of the other trades, I mean, I'll talk about them in a second, but shaved in a lot of them when it hit the 50-day moving average. Kind of took some off the table, right? Secure some juice. And then the Nebius one, we got close on the rest. Things like fully retraced from our entry. And the rest we are chilling. And shout out to Silver, right? Shout out to Silver. We got the last stream we had, we got filled in this thing. This hasn't stopped going ever since. Shout out to anybody that was here that entertained that. Yeah, we're out of this one. So we can kind of remove that for now. Left that for you guys. How's this data looking? Oh wow, there's a huge spike in open interest down here. What the fuck? What the fuck? Let's investigate this a little bit. Yeah, interesting week ahead though, right? I've got some inflation data coming out this week. I'll be curious to see how the market, one, what the data is, and two, more importantly, how the market reacts. Given that big flop on the labor market data on Friday. Know what I'm saying? You know what I am saying, boy? Boy? Other than that, I haven't really traded a whole lot, to be honest. I just had the positions running, I haven't touched them. In terms of new ones, because I've just been busy. For anyone that remembers, like the whole fucking dilemma with like Canada removing perps. Oh, nice. That whole scenario has now been sorted, right? I got mail sent to my house in Spain. So now I had mail with my address, so I could get I can do like level 2 KYC on any like service that operates in Europe now. And I have like my Spanish identity, Spanish passport, etc. So yeah, don't have to worry about getting removed from perps. And we can use Binance now, right? We can use Binance, we can use like Bybit, etc. I don't know which ones are available in Europe or which ones aren't. But like, we now have the option of using all those, right? And Hyperliquid potentially. So it feels good. Feels really good actually. Don't have to worry about that crap. But other than that, yeah, just busy week. Busy week. Fixed my roof. Shout out to that. And then I did a bunch of stuff. There's like a firework festival going on in the city that I'm in right now, so I've been going to check that every time they have it. Went out for dinner or watch the Odyssey. Went out for multiple dinners actually, and drinks. And then we're out here. We're out here this week. My birthday on Saturday, so we're gonna be out of here probably. I imagine if we stream the whole week, Thursday would be the last stream. Yeah, probably something along those lines. Yeah, busy few days though. Very busy few days. But let's check out this open interest data real quick, because I'm curious where these motherfuckers are coming from, right? Where is this spike coming from? Yeah, a lot of shorts opened at the low on Bybit. Okay. Same with OKX. Okay. Also ordered a new mouse. Hopefully this thing gets here pretty soon. I thought it was supposed to be here today. Interestingly enough. Who knows? Who knows? I don't know. Today was crazy where I live. We had like tornado warnings going off. I was at the gym and like the cardio section, like it faces a lake, but it's not like a. You don't have like clear view of the lake. It's like you're doing cardio, looking, and there's like a little bit of a hill, and then there's the lake. But there's a crazy storm happening while I was doing cardio. You could just see lightning just hitting it non-stop. It's been pretty cool actually. Check out a video. You don't have time for that though. I was nerding out. Boy, I was nerding out. Again? And longs. What candle is that? Really? Yeah, in terms of the mouse though, yeah, this thing is happening on my MacBook as well. So it's like definitely the mouse is broken. Hence, we bought a new one. Immediately, boy. I need a working mouse immediately. And interesting. A lot of longs open on this big candle, and a lot of shorts open on this small one. A lot of shorts, actually. Like, literally fucking bottom tick this fucking move. Interesting, right? Right into, like, the previous week value area low. Yeah. Interesting. I guess we'll see, right? Because does this thing start to go from here or not? Or not? This fucking mouse. Ding, ding, ding. Does it start to flip this area and reclaim this or not? So far, like, looking at a little sus, right? Kind of drop below the Valeria low and spent a lot of time down here. How are these profiles developing? Okay. Yeah, I don't know. I don't know, guys. I don't know if we're done going lower yet, right? We're starting to get pretty tight on volatility here, too. Just looking so, because like compare this to like the gold and like metals breakouts, right? These things are like, we talked about all of these compressing and like how some kind of expansion was coming, and we talked about how like it's probably gonna break out and you weren't gonna get the retrace, right? And here you fucking have it across the board. All of them just fucking snapped off. Whereas like this, like, not really looking like that, right? I mean, maybe we start to go, but yeah, I guess we'll see. Yeah, the thing about this that's making me super paranoid is like all the fucking like all the shit traders on X, right? All the fucking brain dead LARPers, blah blah blah. They're all posting hella bullish. All of them. So I'm thinking, no, this is something's not right here, right? Something is not right. But we'll see. We shall see. We gotta like some of this other data afterwards. We don't need this anymore. Did we miss any interesting news? Yeah, I thought I was gonna see a tornado today. That shit was like while I was at the gym and this thunder like and storm was happening. Like at what point it went from like daytime outside to like fucking black, dark as fuck. I know it was like 10 minutes after we got the tornado warning, and the clouds were like flying by hella quick. I was like, damn. Man, this Michael Burry guy, I cannot take. I can't take this guy fucking serious, man. Oh, Intel wants to raise even more. Hmm. Interesting chart. We missed this one. To be honest, we missed this one. Hmm. Bum, 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 bum. What else did we miss? I mean, I guess I should probably talk about like the silver, right? Boom, 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 boom. Probably be watching this a little bit more intently, actually. I was trying to greed this up to here. It might be a little too aggressive. We'll kind of let it play out for now, but yeah. Perhaps a little too aggressive on that one. Okay. Okay. I'm gonna get something to snack on. Y'all got any questions? Drop them now, because if not, boy, what's a certain note? Boy? Um, oh man, I can't wait to go home. Guys, I cannot wait to go home. Cannot wait. Got so much shit lined up. I got people blowing up my phone bitching at me. I was supposed to be back a week ago. So I got people bitching at me, waiting on me to come back. My bad. Also, I saw, how's Hims doing? Like, how did we, like, I think we had an alarm on the down here at one point, didn't we? So we were looking at this trade a while ago. Yeah, back when we were streaming in February, we were looking at this, and we ended up like not getting in on this thing. Damn. This would have been quite the juicer, right? Damn. Yeah, I remember we were looking at this fucking 886 level, and it was starting to roll over. Damn, whatever. Yeah, they're announcing like, seems like all these companies are starting to like, There's like a list of drugs that like compounding pharmacies can make, but like aren't FDA approved per se. And it seems like all these companies are waiting for this announcement of like certain peptides to start doing that. And given how popular they are, I can see these things running pretty hard, right? I was shocked to learn how many people are taking like peptides at my gym. Literally shocked. Like, I didn't realize like how hard they're really trending on social media and whatnot. And how many people are willing to try it? That's the other thing. Well, shout out to Palantir, right? Shout out to Palantir. Still saying in this thing, it's continuing to go, right? Juice, juice, juice. It ended up being a mega juicy trade, mega juice. Let's leave some. Okay, we have an alarm here. We have an alarm here. Okay, I'm gonna get some food because I'm hungry, boy. Hungry as fuck. Hungry as fuck.
Bullish divergence. Watch the low. Watch this strength. Lower low. Higher strength. Lower low. Higher strength. Bullish divergence. Bullish divergence. Watch it turn. Watch it turn. Watch it turn. Price make low, then they get one more. Crowd gets scared, they sell the floor. Momentum rise while the chart look weak. That is the signal underneath. RSI creeping, sellers get tired. Tip still dark, but the discs catch fire. The thing break down, I see a trap, one clean whip. And the price snap back, value area low with the pressure type POC. Pulling through the red skin light. Everybody short when the move gets in. I stay cold and I win the step in. Bullish divergence under the zone. Bullish divergence. Rise comes on. Lower low. Strength rise. Dark chart. Right side. Lower low. Higher strength. Lower low. Higher strength. Watch it turn. Watch it turn. Bullish divergence. 6618 on the pullback path. 786 sip a seat, move fast. Golden pocket where the fear gets loud. Then the bitch steps in and shakes the crowd. Bottom shoulders getting way too proud. Talking like price, can it turn around? One fell push and the structure flips. Now the whole floor moves when the baseline hits. No guessing, just confirmation. Clean reaction, rotation, volume shifts and the candles breathe. I read the chart like it talks to me. Low gets lower, strength gets higher. Sell is fading, buyers wire. Crowd sees panic. I see change. Quiet signal. That heavy rain.
Build it slow,
Let me breathe.
price too low.
Strength beneath.
One more whip,
One more sign.
then we ride.
Then we climb.
Build it slow,
Let me breathe.
price too low.
Strength beneath.
One more whip,
One more sign.
then we ride.
Then we climb. Lower low. Higher strength. Lower low. Higher strength. Lower low. Bullish divergence. Bullish divergence. Lower low. Higher strength. Bullish divergence. Bullish divergence. Watch it turn. Watch it turn. Watch it turn. Value low. POC. Price snap back. Energy. Bullish divergence all night. Dark chart. Green light. Late night screens based in the street. Cowbell sharp with the 808 heat. Price look dead, but the data spoke. One clean bounce in the floor. Oh, whoa. They sold the bottom, that was their mistake. I waited calm for the rhythm to break. Momentum told me the selling was weak. Now the chart got lift and the move got sleek. No rush on the entry. No fear in the red, just patience. Pressure, time and speed. When the low gets swept and the strength survive. Bullish brings it back alive. Lower low. Higher strength. Lower low. Higher strength. Bullish divergence. Bullish divergence. Watch it turn. Watch it turn. Watch it turn. Price react. Base attack. Clean reversal. Under back. Bullish divergence all night. Dark chart. Green light. Marco straights. Bullish divergence. Clean reversal. No chasing.
Just confirmation.
Marcos trade. Always prepared. The market open. 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 Market open. Open. Market open. Market open. Market open.
Boom, boom. Boom, 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 boom. Bobby Lambs, hey. Hello, 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 Bobby Lambs. How are you? Good, sir. Or woman. Boom, 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 boom. Man, I went downtown today, the city where I live. Yo, man, this shit is sketchy as hell these days. People, man, people were literally like, hold on, let me just Google a picture of this shit. Yeah, literally. I had to make sure I saw what I think I saw. Motherfucking crack pipes. Motherfuckers are smoking crack pipes broad day. Like multiple people. I'm like, what the fuck is this shit? Like, someone like arrest these people, put them in jail or some shit? Fucking motherfucking addicts. Yeah. Like, just get them off the street or something. Like, goddamn. Like, there's a law. I'm talking like, I don't even know. And the thing is, they were in groups too. So it'd be like 4 people sharing a pipe. Fucking ridiculous. Just fucking broad day in the middle of the fucking downtown crowded area. Yeah. Cannot fucking believe my eyes. I don't know what's happening in this country. Shit is fucking ridiculous. Yeah. Boom, ba, ba, boom, ba, ba, boom. Tokyo two-step. Thanks for the XAU trade. What? I didn't even trade. Gold? I didn't even trade it. Oh, like you're asking about it, yeah? Yeah, I mean, if you took it, yeah, shout out to you, I guess, right? Curious how you took the trade, but not exactly what we talked about though that day that you were asking. This thing just broke out and never looked back, right? Quite the strong breakout. Yeah. Anyways, let's kind of find something to nerd out on. Dun, 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 dun. Where's that video? I'll put this up here, put this up here. This over here.
Pretty much all trading strategies boil down to these 3 specific. specific moves. Right?
Exactly. We can talk about ICT, Fibonacci trading, whatever you want, but everything is made based on this.
It's time you understand the first principles to successful trading. And no one better than a 20-year trading veteran, Pavel Kicek. Pavel runs funds for institutions and high net worth individuals using algorithmic strategies.
Once you find a good trading edge, what's your second biggest task? Trade your edge as high size as possible to make as much money of that before someone else steps in. People are asking, what's the best trading approach? As you are getting more advanced as a trader, the best approach is...
In this episode, he breaks down the exact first principles that traders should be focused on, regardless of asset class and regardless of where they are at in their journey.
That's the question everyone is asking. If I will find something which is working, will it be working forever? I think this is something traders, especially retail traders, don't understand properly. But the truth is,
in this episode, you will learn exactly how to build progress as a trader and exactly how to build your career as a trader with strong foundation. All this and more in this special episode of Chart Fanatics.
something I wanted to show you here. This is a concept which not many traders really properly understand. People tend to think about portfolio trading the same way as about diversification, but there is one big difference. Let me show you.
Today, we're going to go through a universal concept. So regardless of what you trade, most of all, this is the first principles when it comes to what you should be doing as a trader. I'm super excited to get into this. We are with the one and only Pavel Kicek.
Thank you, Riz. Thank you for having me here.
My absolute pleasure. So where do you think we should begin when it comes to first principles in trading?
Well, what I would start with is actually showing you something which is called Dunning-Kruger effect. What it means is that it is showing relationship with competence and confidence. And actually, you were talking about me losing 20 years ago. Actually, I was losing for many years. And the biggest reason was because I didn't understand this relationship between competence and confidence. What it means is that if you start doing something, you read something, you learn something, and your confidence is going very high very quickly. And the biggest issue is that you are getting very quickly to so-called peak of Mon-Stupid, it's called. It doesn't really matter how it is called, but the truth is that most traders are staying here almost forever. Because then if you realize that you are doing something wrong here and you are doing it wrong basically for the long term, then you are getting much lower with your confidence as your competence is growing. And over the long term, as you are getting real competence, just then your confidence is where it should be and you are reaching mastery. And I was thinking about what we should give to your followers today. I was thinking about what's the biggest issue retail traders have when trading and when losing, because the truth is that most are losing. And from my point of view, this is this. They learn something and they try to understand trading tools without understanding what trading is really about. Because the biggest problem is that trading is the purest form of capitalism. And that's something most traders don't realize. Most traders, they do think that they start, they learn some moving average crossover, some type of pattern, whatever, they start trading, and if they stick to it, they will make money. But the truth is that most of them simply don't understand the basics which are driving the market, and basics which are giving you the proper way how to think about market and how to really trade. And why is trading actually the purest form of capitalism? Because as you know, everyone is on the market to make money, right? I'm there, our company is there, all the hedge funds are there, market makers which are providing liquidity are there, even your brokers are there which are taking money based on your fees or through your fees. So everyone is there to make money, and that's first. Everything is about money. And second is that trading is zero-sum game. People are always thinking most of trading approaches are zero-sum game. Some approaches can be positive sum game, but depends. But why it is zero-sum game? Because the short-term, especially the short-term approaches, most retail traders are trying to trade are really zero-sum, but you have your trading fees there. And everyone is thinking about them. Everyone is forgetting, how big of an impact they can have over the long term. And I think this is really crucial. So here what I would want to show you is that you have to think about trading from 2 points of view. One is playground, and the second is actually approach. What I mean by that is that you have to understand what asset class and what time frame you want to trade. This is under playground. And what trading approach you should be trading based on the playground you are choosing. Because that's what I was talking about here. The biggest issue is that people think that they will just start trading something on one asset class and it will be the same for all the other asset classes, no matter what. But the truth is that this is not how trading is working. I will throw here a lot of simple charts which will be showing different relationships from the first perspective of trading, and I will show you later how everything is put together and how traders should be thinking about it, if you agree. So first of all, let's talk a little bit about Sharpe ratio. I will mention just a few metrics, everything else will be oversimplified, but why Sharpe ratio is important, because this is something how institutional traders, institutional vehicles are thinking about trading. What they want is to have the highest possible Sharpe ratio. Sharpe ratio, just to remind it, is about how much returns we can make on 1 unit of volatility, basically, volatility of the trading account. And if we draw some equity curve, let's say we have some trading approach, which is running with this level of volatility, and we have another one, which is much more stable. This one has much higher Sharpe ratio because the returns are, for example, the same, but the volatility is much lower. If Sharpe ratio, if you push the returns even higher, the Sharpe ratio is growing. If returns are going down and volatility remains, the Sharpe ratio is going down. Why it is important? And I also think that it is important for retail traders too, because everyone wants to get stability in trading, right? Everyone tries to make, I don't know, 1% per week or few percents per month or whatever. The truth is that this is the hardest discipline of trading, to be as stable as possible. Why? Because people sometimes think that institutions are like dumb, that they are not smart. But true is that institutional clients are the smartest money by far, because they have all the money to really pay the smartest brains and work on the highest possible Sharpe ratio, aka on the highest possible stability. Why it is important? Because in finance, people get paid by performance. And if you are paid based on quarterly fees, monthly, yearly fees, doesn't really matter. You really want to maximize the return potential with as low volatility as possible. This is the game of institutional trading. Of course, there are some exceptions, but in general, this is what most institutional trading firms, hedge funds, and different kind of trading vehicles want, because this is what they are paid for. And what do you think that is the biggest task of any trader?
Futures traders, it's time to hear about Apex Trader Funding, the largest futures firm in the industry. They have completely changed.
I mean, I don't know. Like, no glaring statement that sounds out there that I really care to comment much on, but I also don't like. First of all, this guy is like, this is like nothing, right? This is literally nothing. Like, I don't even know why they throw this in here. Yeah. Like, if he's managing like billions of dollars, okay, sure, I guess throw it on the screen, but he's not. But like a lot of these like various metrics like this, doesn't really mean much, right? Doesn't really mean much. It's like, yeah, if you're a huge fund, obviously you don't want to have massive volatility, because then you're losing literally a huge nominal amount of money to the downside. With like a smaller account, you can tolerate some of that. But different strategies for different sizes, right?
Change the game with their new evaluation. And no 2 million those are 100% platforms CF trading
with edge, highest trading edge as possible. So basically, all trading is about is trading edge. Basically, maximizing trading edge is something you have to do as a trader. And if you want to maximize trading edge, and you know that everyone on the market is there to take your money, you have to minimize competition. And now we are getting to a place which most retail traders are doing very wrong. What they are doing is that they are getting to overcrowded battlefields. They are getting to places where there are potentially very high Sharpe ratios, but there are also the biggest and the best competitors on the market, because everyone wants to stabilize and push returns while decreasing the volatility. And that's why, as a first step, I would like to show you how to think as a retail trader in terms of how to avoid competition, or not avoid, but reduce the competition as much as possible. And we can do it through different ways, but one of them is to understand the relationship between Sharpe ratio and trading time frame. So let's say on x-axis you have trading time frame, on the y-axis you have Sharpe ratio, and the truth is that there is this relationship. What it means is that the bigger the time frame, the lower the Sharpe ratio, basically. the higher the volatility, and the returns are usually also a little bit smaller. So if you would put here 1 day, there would be some type of Sharpe ratio, while on 1 hour, the Sharpe ratio potentially could be higher. There are many reasons for that. The biggest one is that the capital turnover is better, that you are running with smaller drawdowns. Usually your drawdowns are a little bit shorter. Basically something
Is that
all
true?
even retail traders want. But the truth is that retail traders don't have the proper tools usually to reach it. So this is first thing which is important. Another one is that traders have to think about what assets to trade, because this is something we didn't talk about yet that much. We have basically few basic asset classes. We have Forex, let's say. Then we have commodities or commodity futures, stocks or ETFs, and our discipline right now, which is crypto.
Let's go back a little bit.
Then we have another one is that traders have to think about what assets to trade, because this is something we didn't talk about yet that much.
Yeah, I was gonna say, like, this is not this is not true. This is not right. I don't know where this guy got this from.
We have basically few basic asset classes. We have Forex, let's say. Then we have commodities or commodity futures, stocks or ETFs, and our discipline right now, which is crypto. And why? If you would rank the asset classes based on the potential edge for traders, for retail traders, the truth would be that the more down you are going, the higher the trading edge for retail traders.
That's
Why?
not true either.
Because the biggest ones,
Yeah, this guy's yapping right now. It's not true either.
Forex, but also big stock indices like S&P 500 in mini futures, these are overcrowded because the biggest, the smartest players can place the biggest liquidity there. So if they are focusing on like making money with the highest potential Sharpe ratio, they are focusing on something where they can really trade in size.
Yeah.
And that's the key. What one of a few advantages as a retail trader really is to trade in small sizes. Basically, we are talking in accounts below $1 million, for example. And the truth is that if you look at the relationship between liquidity and time frame, you would realize that if you want to trade on high liquid asset classes like Forex, for example, you should be trading the highest possible time frame. Because as you already know, the shorter time frames, these are really getting overcrowded because you can potentially get the highest potential Sharpe ratio. But the higher you are going, the higher your possibility to make money trading, because you are really exposed to real trading edge. Just very quickly mention what trading edge is about, because people are confusing it a bit. Trading edge is basically statistically significant advantage that if you are doing something in the market over the long term, you have a high probability that you will make money trading.
Yeah.
And this is really key. What's also important is that if we are talking about liquidity on the market, again, just to understand how thinking about liquidity, that's basically how much money you can throw on the market per some time, in a minute, hour, doesn't really matter. The truth is that the higher the liquidity, the usually lower the volatility of an asset class. And why this is super important is because most retail...
That's not true. Man, this guy is yapping. This guy's fucking yapping. Yeah. Like, yeah, in some cases this is true, but there's also cases where it's not, right? Like, a lot of times when there is... Okay, what do people typically do when they're trading? They wake up in the morning and they toss on their scanner, right? Pre-market scanner, ding, 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 ding in the morning, and they're scanning for abnormally high volume. And then everybody's doing the same thing, and they all go to trade that same name, and then the liquidity is incredibly high because there's fucking so many shares being traded. So, like, this guy's just yapping right now, right?
That they are trading...
Not a fan.
Approaches, momentum, breakout, trend following, you name it.
But sure, we'll keep listening.
Directional movement. And the more volatility you have in the market, the more directional movements you are getting out of the market. So it means...
Like, in general, though, right? Like, yes, this is a somewhat fair statement. Like, obviously, you're not going to get, like, you know, 20-30% daily swing in, like, some, like, mega cap.
to look at Forex. Forex could be, for example, somewhere like here. It is the most liquid asset class in general, and also it is the least volatile asset class you can trade. On the other hand, commodities or stocks could be around here.
Yeah.
So these are a little bit less liquid and a little bit more volatile. Again, here there is like big range of your stocks from S&P 500. On the other hand, this would be like here. On
Your small caps.
exactly, small caps could be, for example, like here.
Mhm.
And the highest you would have crypto, because if you compare volatility of crypto, for example, these days, the broad crypto market is moving 5 to 10x higher than stocks from S&P 500. That's why you can hear this
Why was
thing
this recorded? Because this is like clearly outdated, right? It's not true at all.
of people
And there's been, but first of all, small caps in the stock market have always had like incredibly high volatility, probably higher than crypto on average. But like, especially like this whole past year, are you kidding me? Even like the mid to large caps are having crazy volatility.
on crypto which are making hundreds and even thousands of percents in very strong bull market, because the volatility is just tremendous. And there is this so-called immature to mature asset cycle, which is telling you that on the start, the asset is very immature, it is very volatile and low liquid.
Yep.
And the more it is getting mature, it is getting more liquid and less volatile. Why? Because everyone knows, every smart money vehicle knows that a high volatility is giving you much bigger potential of returns compared to low vol type of asset classes. And that's why money is flowing to these high vol asset classes like crypto. What's happening? The liquidity is getting bigger,
Yeah.
it's growing, while the volatility is getting lower. This is also the concept, actually, why edge is decaying, one of the concepts, which we will be talking a little bit later.
Yeah.
But this is important. From this first part, what traders, especially retail traders, should know is that they should focus on less liquid, more volatile asset classes, if possible, and they should focus on bigger time frames.
That's not.
Because
This
the
is
bigger
not
time
like
frame-
that is I. Whatever. I guess we each have our own opinions, but to me that is terrible advice. Terrible advice. Terrible. Right? Like you're not learning. If that is their approach that you take and you end up doing that successfully, you're gonna have to unlearn these strategies to scale later on. So why not just learn how to trade properly from the get-go, so you don't have to deal with this fucking nonsense of like trading low caps where like one fucking person enters the order book and just everything goes fucking sideways. Right? Why not learn the math immediately?
frame, the lower the Sharpe ratio. But this is not an issue for a single retail trader. I will show you why later on. But they are playing on a battlefield which is not fully loaded with the smartest money. So this is the first concept I would like to introduce.
36 seconds. That's Hola Prime. Why Data Prime get 8 left.
But the tutor asks. So now we are getting to edge decay, because you know that's the question everyone is asking: is edge decaying? If I will find something which is working, will it be working forever
Yeah.
or one? I think this is something traders, especially retail traders, don't understand properly. But the truth is that based on our quant research team, based on other research teams, we already know, and many research papers actually, we already know that edge is decaying. It is basically true. So
I mean,
this
is it
something
though? Is it
you
though?
have to take as it is, because that's
Like
part-
if you go back and study the history of these charts, right? They all have very similar. It's like a manifestation of supply and demand, right? Price goes to somewhere, and then there's some equilibrium, and then once that everyone is done exchanging in that equilibrium range, then price moves out of it. And that is just like a manifestation of supply and demand. So like, does that ever decay? You tell me. Tell me. Maybe like, if you're running some like obscure niche strategies, like yes, obviously that statement is more applicable.
of trading.
Yeah.
If you start trading something now and it is making money, probably in a year, 2 or 5, it will be making less money per one unit of your risk, basically. So if we start with another simple chart, this is showing the relationship between edge, and right now we don't have to think about what edge is or how we would describe it, but let's say we have some edge, we have time, and over the long term, there is this function, basically. The longer the edge is on the market, the lower the edge is. Why? Because if you know that some pattern is making money, usually some other smart money players will be getting to the market, trade this pattern too, and what will happen is that they will so-called arbitrage the edge out of the market. So this is first important concept retail traders, but all traders have to understand. It also means, by the way, that as a part of trading is ongoing research. This is basically something you have to understand, that because of edge decay, you still have to make a research. You have to really dive deeper into trading and trading concepts and getting better in that, because otherwise you lose your edge completely and you will start losing money with a concept which was working in the past. And I will show you the exact example what, for example, happened on stocks a little bit later on. What's also true is that if you look at edge decay, the lower the time frame, the quicker the rate of the decay. It means that, for example, on a 1 minute chart, the edge is decaying much quicker compared to weekly chart or 1 day or daily chart. Now why? Because on 1 minute chart, first of all, usually you are getting higher Sharpe ratio, which we're already talking about. And second, what's even more important is that the liquidity on 1 minute chart is much lower compared to, for example, weekly chart. And it means that to arbitrage the edge out of the market, you just need much less money to get the edge out of the market. So that's why if you are a retail trader, you want to stick with your edge as high, or sorry, as long as possible. It's probably smarter to think in longer time frames, because the thing is that once you find a good trading edge, what's your second biggest task? It is trade your edge as much as possible with as high size as possible to make as much money of that before someone else steps in and they'll arbitrage the edge about. Because really, you have to think about markets as a place when people are competing for your money and when people, all of them are trying to exploit tradable edges and proper ways how to really take money out of the market. And we have to add to this, these two charts, one more chart, which is showing the relationship between expectancy and time frame. What's expectancy? Expectancy is average return per trade. Basically, if you would make 1,000 trades, on average, there would be some expectancy or average return per trade. And this is a very important relationship here, because the higher the time frame, that's even exponential function, the higher the expectancy of every single trade. Some exact numbers, for example, if you would be trading breakouts on crypto, the expectancy would be, let's say, 1.5%. If you would be trading on 1 day time frame. And if we trade the same breakout on, let's say, 1 hour time frame, the expectancy or average return per trade would be about 0.4%. And now, to these three ideas, we are getting trading fees. Concept which really traders are not thinking enough about. And as trading fees, what I mean is slippage. That's one, basically bid-ask spread. Depends on how you are entering to the trade and exiting the trade. And second are fees, your normal trading fees. Basically, you can call it trading costs even. That's even better, actually. And in crypto, on, let's say, Binance Futures, if you are trading breakout with an account below 1 mil, you can have average trading cost, which means slippage and fees together, about 0.2%. Now, if you start trading your breakout strategy with expectancy of 0.4% before fees, you are getting a net 0.2% after fees. So it means that 50% of your profits will take fees, while if you are trading on 1 day or daily time frame, fees will eat, let's say, 15%, below 15% of your expectancy.
This guy needs to grow his account, right? That's got to get hit with the fees in the exchange. Sheesh, that's broke. Oh damn. But on a more serious note, though, like one, you can get lowered fees, and two, you can trade the ETFs, right? Which is like in much lower fees. Like I know people that trade crypto that just like, avoid the exchanges completely because it's just not worth the fees.
And now, if you put it all together, and this is really, really important, you know that edge is decaying. You know that your biggest task as a trader, if you have an edge, is to trade it as long as possible before the edge is decayed. And if you start trading on some low time frame with low expectancy compared to the trading costs, you are getting very quickly to a point where your expectancy is equal actually to your trading fees. Because trading fees or trading costs will remain the same. Maybe the fees will go a little bit lower because of the competition of brokers, let's say. But the truth is that slippage could get a little bit better, a little bit worse, depends on the market. But over the long term, it will remain more or less constant, while the edge will for sure decreasing. And that's why, again, and I will push this idea more and more, if you want to trade profitably as a retail trader over the long term, it makes sense to trade higher time frames or shorter time frames, but pushing the average holding time as high as possible. So for example, it doesn't really matter if you are trading based on the daily data and you are keeping the position for 3 days, or if you are making the decision based on 5 minutes data, but you are also holding the position for 3 days.
Okay.
Because at the end of the day, the longer you are with the position, the higher on average your expectancy.
I don't know. Like, you know, the vibe I'm getting from this video is that this guy is just sitting here, just word vomiting his subjective experience in trading. Because a lot of the shit he's saying is just not true, right? Or it's like completely subjective. There are people that do the complete opposite way just described and make fucking up. This guy's managing 20 mil. I know people that are fucking 9-figure plus accounts, solo trading, doing exactly what he said to not do. So, okay.
A given trade. And this is super important because what I can see more often than it should be is that traders they realize what trading is about. They hop on some intraday trading of Forex, for example, which is the most liquid asset class ever, but it can be E-mini S&P, it can be whatever. They are holding a position for a few minutes because they are keen on getting as stable profits from the market as possible. But what happens is that they are trading with very low expectancy, and the edge, even if they would have the edge from the start, which is question actually, but if they have the edge from the start, the edge will decay and it will eat all their profits because of trading fees. So from this part, I believe that what should be the main output is that the more liquid the asset class, the higher time frames you should be trading, then you should stay away of the highest potential competition, which is in general low time frame, high liquid markets.
Yeah.
And you have to know that the edge is decaying. And that's why, honestly, if you think about it this way, your place as a retail trader should be in markets and time frames where there is the lowest ratio between professionals, smart money, and retails. Because we know that retails on average, they lose money. And if you are trading against them as a smart retail trader, smart individual trader, you can do it very simply, but you can understand what the concepts are about.
Like, and the other thing about this is like this logic makes no sense. Like this guy's implying that what there's like a fucking retail arena that only retail traders are trading at, and there's no smart money trading against them. It doesn't fucking exist.
This was a quick overview. Now we can get to trading approaches finally.
So we said like the stage so far in terms of why we should be thinking along these lines, regardless of the asset class that you're trading. However, understanding the reality of that asset class, as mentioned in terms of its liquidity, because we've heard of other people within the industry talking about how Forex has no edge. It doesn't mean there's zero edge. It just means that it's much harder to extract that edge.
Exactly.
In comparison to other asset classes like crypto or even small cap stocks, for example, due to the nature of the volatility and the liquidity involved. And that's why even if you do trade Forex, for example, the higher time frame is probably where you're going to find that edge versus lower time frames.
Exactly. That's great sum up. Actually, we'll get to that after I would explain basic trading approaches and how they are working in general from the first principles.
Perfect.
And then I would like to give some ideas about how to approach different asset classes and how to trade them and to have the highest potential edge or highest edge potential, because that's our main task as traders. So let's go finally to trading approaches, because that's why we are here. And there are basically 4 main approaches if we look at this from the first principle thinking. This is arbitrage, it's market making, it's momentum trading, and mean reversion trading. Arbitrage and momentum trading on most asset classes is only for professional traders. And there is one relationship which is highly connected, and it is that the lower the liquidity, the higher potential of profitable arbitrages or market making retail trader has. What it means is that you definitely cannot go to euro-dollar pair and start market making there actually, and you would think that you will be making money there because the smartest, biggest vehicles are there. They are extracting the edge. The same with arbitrages, almost impossible on Forex these days. But on the other hand, the asset with the lowest liquidity, which is crypto right now, for example, there are many retail traders, or let's call them better individual traders, who are able to very profitably trade arbitrages, or they are able to do market making because there is low liquidity, and that's why the biggest, smartest vehicles, they cannot place their orders in size there, and that's why it's not an interesting market for them yet. As I showed you, as the liquidity will be growing, the volatility will be going down, and these players will get there too, and also because of regulatory clarity and everything. But right now, you can still do arbitrages or market making on crypto, which I think maybe with some small cap stocks is the only place where you should be doing something like that. And then for retail traders, you have your momentum trading and mean reversion trading. This is actually something retail traders should focus on, and they are even focusing on. So this is fine, but what they do not understand oftentimes is what are the drivers behind momentum and mean reversion and how to really trade them. Because the biggest issue is
Like, what does he mean? Like, I feel like this guy needs to like substitute the word retail trader for like unprofitable trader, because like first of all, this guy is a fucking retail trader. Second of all, like everybody knows this. This is not something fucking it's like a fucking secret.
is that if you are on this peak of Mount Stupid, as I was, you are finding tools. You are not trying to understand concepts which are profitable, but you are trying to find another best pattern. You are trying to find another best indicator crossover or whatever. But if you understand how momentum is created on the market and mean reversion is created on the market, then tools are just something which is helping you to describe the market conditions in which you want to trade momentum or mean reversion, not vice versa. That's important. So let's say we have momentum. What's basically momentum? We have time here, and we have price or returns here. And momentum is saying us in general that if something starts moving, there is some probability that it will continue to move. As simple. While on the other hand, and we'll get into bigger detail then, mean reversion is completely different. Mean reversion is that if we have some market movement and we have some mean, it can be, for example, short-term moving average, basically something which the price action is moving around. If the price will make sudden drop far from the mean, the price tends to mean revert, tends to revert to the mean. That's why mean reversion. And if you compare these two approaches, what momentum is about is that the higher the rate of change, the higher the probability that the momentum will continue. So basically, the stronger the push, the higher the probability that at least short-term momentum, we'll talk a little bit later about it, short-term momentum will continue. While on the other hand, mean reversion is telling you that once the push is too far, it's much better to trade to the other side. And actually, mean reversion is oftentimes connected with counter-trend trading, but this is usually not correct because trend is part of momentum, but trend is so-called long-term momentum. What it means is that if we make one more chart, let's call it long-term momentum, again, time and price. Long-term momentum is your typical trend. Typical trend is usually driven by some macros, by some changes on the market, and it's making some regime shift. You usually don't want to trade against something like that. For example, today, gold is trending over the whole year, actually, and you probably wouldn't want to start picking the bottom and trade against it. But there are many points as a part of the trend, long-term trend, where you can trade mean reversion type of trades. Because if we look at what long-term momentum is about, long-term momentum is nothing but connection of short-term momentum, which is followed by mean reversion. So then you have your trend, and as part of the trend, you have both short-term momentum approaches there and you have mean reversion approaches there. And why I'm saying it is because some traders are saying you should be trading short-term momentum, aka breakouts, or others are trading you should be trading mean reversion, aka counter-trend trading, or you should be trading trend following only. But the truth is that on the proper chart, on any chart actually, you see how trends are always built of all three approaches, which is short-term momentum, long-term momentum, and mean reversion. And if you understand that, you understand how markets are moving in general. This is basically the playbook of how markets are moving. And now you only need tools, how you are describing that what's happening on the market is short-term momentum or tradable short-term momentum, or what's happening on the market is potential mean reversion trade, or it's long-term momentum. So let's get to that. And let's start with short-term momentum, aka breakout. Because breakout trading, I think, especially for retail traders, it's pretty well-known type of trading, right? Everyone is trading it or is trying to trade it.
Yeah, popular one in futures is the opening range breakout. Right?
Exactly. That's actually type of breakout which is working over 40, 50 decades. So that's a pretty interesting edge. What breakouts or short-term momentum, a little bit simplified, is about is that you have your price action. Let's say these are daily candles. They are moving somehow. And if you want to trade short-term momentum, your task is to measure the volatility or the price expansion of the market. So let's say last 5 candles were moving on average by 1%.
Yeah.
This is average of these 5 candles. And then your sixth candle will move by 2%. And this is so-called volatility expansion. And this is tradable breakout by itself. So if you are able to measure the volatility expansion, you basically have proper breakout entry. That's all breakouts are about. And then let's talk about tools. You can use momentum indicators like CCI, RSI, any indicator which is telling you that there is new momentum on the market and the momentum is significant.
Yeah.
And once there is significant momentum, you can speculate that this momentum will continue somehow. So we have an entry, which is basically momentum expansion, but we don't have the exit. And based on proper research, I can tell you that short-term momentum on the market is a momentum on the daily time frame which can last 2 to 5 days. So you can use as simple exit as exiting after X days. Let's say you exit in 5 days. You have to do your research, right? But this is one way of potential exiting of the position. Or you can measure again the momentum, again by your RSI, CCI. And once the momentum disappears, you basically get out of the market and you call the trade done. And that's all what short-term momentum, aka breakouts, are about. Like you can play any fancy game with different kind of clusters, different tools. It can help. You can use something for filters, for example, before entering into trades.
I don't know. It's just like, whatever. Okay, I guess it's an hour-long video. You can only say so much. Maybe there's a lot of a lot more context he's just not getting out. But like this, like this 5-day kind of way of exiting, I don't know. Not ideal, right? Much more efficient ways, effective ways to go about doing this.
Further make the performance better, but this is what the edge is about. You are measuring the momentum expansion, and after X days, if the momentum disappears, you get out of the market. Ideally, before there is some deep correction.
Yeah.
And that's it. These are breakouts. Then we have mean reversion type of trading, and mean reversion is completely opposite approach. Basically, you have some movement, average movement. Let's say these are, again, daily charts here. I will simplify it. And you are measuring how far the price is going from so-called mean. And as a mean, you can use, for example, 5-day moving average. This is your mean. And every day, you are measuring how far your close is from this 5-day moving average. You get some average rate of change on a daily basis. Let's say it could be 2%, right? Let's say this is 2% average. And so what we know based on the research is that if in one day you get very big, much bigger, for example, than this type of movement, like 6% or 7%, this type of movement tends to mean revert. And sometimes it can seem as the same. Actually, sometimes short-term momentum leads to mean reversion. And on the other hand, sometimes you are trading mean reversion and the trade continues to go against you. That's normal, that's part of the trading. But this is the concept. So everything you have to do, all you have to do really, is that you are measuring the difference from...
I don't know, like, I guess, like, the problem with this is that there's so much context being left out of this, right? Like, what if this was 6% move was based on some like bearish news that affected the whole market? Right? Like, this can be like, you have to account for this, right? Like, why did this move happen? And also, like what is the frequency of a 6% move compared to the smaller ones? Like, let's say this happens like once every 2 weeks, then it's really not that interesting, big of a deal, right? Like, what is the result after this happens?
from the mean. And if the difference is too big, you enter the trade. And what should be your exit? Usually, this mean reverting trades on the daily time frame, they take anywhere between 1 to 3, 4 days. So it can be something very simple as exit after X days, for example. By the way, this is an exit which is quite institutional, but on the other hand, retail traders are not using it that much because it doesn't seem to be that fancy. But the truth is that it's working very well in trading in general. So you can use some days in exit, or you can, for example, use your mean as an exit signal. So if the market will get back to the mean, you get out of the market.
Yeah.
Again, very simple concept. And then you can again use, for example, your RSI and trading based on overbought or oversold areas, ideally with some shorter period, or you can take some price action measurement. It doesn't really matter because these are only tools. And once you understand what you want to trade, you are only using the tools to describe the market properly. And the last one, we have trend following. And trend following has many ways how to trade it actually, but the simplest one is, because what's trend following about? Trend following is about catching big trends. There's a typical trend is your friend, right? Everyone knows it. But what it is about is that you should catch some big change on the market.
Yeah.
You can do it based on some macroeconomics data. You can also do it based on simple technical analysis. Let's go with technical analysis here. So everyone knows that strong supports or resistances, if they are broken, there is some tendency that the market will continue in the direction of the breakout, right? So, and what's also true is that the stronger the resistance or support, the higher potential of the following movement.
Okay.
So we can do it as simply as, for example, tracking some 100-day high. And once the market breaks this 100-day high, you enter the position. And so it can be something like long-term.
Is that meant to be an EMA, or was just as in the
It
last
can be,
days?
yeah, it can be something as simple as you are looking at your last 100 candles. You take the highest high of the last 100 candles, and once the market closes or breaks,
Okay.
it doesn't really matter. Both approaches are correct. This highest high in 100 days, 200. Actually, the higher the period, the better. So all-time high is usually bringing the strongest trading edges. So if market is breaking through all-time high, the edge is probably the strongest you can find with trend following. But 100 day, 200 days is all good. Once this resistance is broken, trade. So
Oh,
it
man.
can be just some support resistance breakout, some higher one. And then, as we all know, trend following is about sticking with your position as long as possible. And for this, you can only use, for example, moving average, let's say 10-day moving average.
For like management.
Exactly. Basically, once the market closes below your 10-day moving average, you get out of the position and you call the trade done.
So pretty much all trading strategies boil down to these 3 specific moves. Right?
Exactly.
Breakouts, mean revert, or trend following.
Exactly. Basically,
Well, not necessarily, right? It's
right
not
now
trading
we
the
can talk
range at
about
all.
ICT, we can talk about Fibonacci trading, we can talk about whatever you want, but everything is made based on this first principle that you are trading either breakout or mean reversion or trend following, or what's interesting, the connection of trend following and mean reversion, for example, because all traders know a well-known trading approach, which is basically entering on correction into the trend.
Yeah.
But what it is, in fact, how it can be described systematically is that market breaks above 100-day high.
Yeah.
So we have a breakout, and now we have correction. But what's correction? Mean reverting movement.
So they start to complement each other.
Exactly. So basically, you describe this as a trend following type of breakout, and now you are measuring this mean reversion movement, and you enter, and you are speculating that the market will continue higher.
Yeah.
What's important to mention here, I think that's pretty interesting for most traders. Retail traders tend to rely on confirmations. So what typical trend follower and retail trader would do is that they would want to see something like this, like the trade the market would continue in the direction of the breakout, and then they would basically enter. But the truth is that with mean reversion, the lower the market goes, the higher the probability that if you enter, you will end up with wins. So if you want to trade mean reversion type of entry after breakout, aka correction into trend, it's better not to rely on confirmation, but measure this correction somehow and enter as the market is doing this mean reversion, not after the confirmation.
Understood.
So this is quite important, and I believe people should understand it very well. Okay, now as we got to all the trading approaches, we can get back to asset classes and what approaches to trade there. Because we started with stocks, we started with
Let's hurry this shit up, man. I can't, like,
commodities,
losing brain cells watching this shit.
Forex, and crypto. And now let's use it as a sum up what we learned here during this session, because if we want to start trading for living, for making money, we have to maximizing our trading edge potential. So let's say that if I would want to start trading on stocks, I need to understand what approaches are the best for this asset class. And everyone knows, for example, that's a little bit simplified, but everyone knows what stock market does if there is a correction. On average, it tends to go up again, especially if we are talking about broad stock indexes like S&P 500. And just from this one, and what we have learned, we can say that on stocks, you should be trading momentum, ideally long-term momentum, aka trend following, to the long side. Because stocks, they tend to mean revert to the long side over the long term. So the edge, the biggest edge is in long-term momentum to the long side. Plus the second one, which is great, is mean reversion, especially long type of trading, which is exactly what we were describing here. Basically, we are speculating.
This whole what he's describing is like pretty ridiculous, right? Like there are people like the edge you have is the edge you have, right? If your edge is in shorting stocks, then that's your edge. So I got this, like him saying this is like so incredibly fucking subjective.
That the market will mean revert back and will continue growing.
Yeah.
So if I'm starting trading stocks, and we are talking about bigger stocks right now, the bigger the stocks, the more you should incline to these two basic approaches. But if you would go with small caps, for example, and I know that you also had a podcast which was connected with shorting stock small caps, the truth is that because small caps are not that efficient, not as liquid, the biggest players are not there. There are many more edges and inefficiencies, and that's why you can trade there even short-term momentum, and you can trade there, for example, even mean reversion short. But if you want to trade big stocks, let's say from S&P 500, these are the approaches you should be trading over the long term because you are maximizing your profit potential, ideally on big time frames like 1 day and higher, because on lower time frames you are having smaller expectancies. Commodities, we can cover it very simply. On commodities, you can trade basically all, because most commodities are not that efficient. You can go long-term trend following, you can go short-term momentum, you can even go mean reversion. Forex and retail traders, they should stick to long-term momentum, aka trend following, or mean reversion, because Forex markets, they tend to mean revert over the long term and even over the short term. And crypto, it's quite simple. That's the least efficient, least liquid, most volatile market. You can again trade all approaches. What's also interesting, if you look at it, is that long-term momentum is in all these asset classes. You can trade it basically across all assets, and that's why traders are calling it as the most robust trading approach in general. So if you don't know what to trade, starting with very simple long-term momentum, aka trend following approach across many assets is probably the best start. And why it is so strong is because the Sharpe ratio is very low. So smart money, there are many trading vehicles which are trading long-term trend following. Of course there are, but smart money are not that focused on it, and they are much more focused on lower time frames and more liquid assets. So now we somehow got back to where we started, because you can see that if you understand the markets from the first principles, you can much more confidently choose on what asset classes, what to trade and how, and just then you can start building your trading approach through different tools.
I love that.
Maybe we could mention one thing, because let's say you are a trader, you start trading with short-term momentum commodities. So let's say we have one strategy and it is trading commodities and momentum, short-term momentum, and what to do now? People are asking me, what's the best trading approach? What should I be trading? The truth is that as you are getting more advanced as a trader, the best approach is to trade as many trading approaches as possible. So your second strategy could be, for example, mean reversion on Forex. And your third strategy could be as a trader, the do now. People are asking me, what's the best trading approach? What should I be trading? The truth is that as you are getting more advanced as a trader, the best approach is to trade as many.
Okay, I was gonna say, I thought he was saying that for like a beginner. I'm like, that's fucking faded. Yeah. Agree with that.
As possible.
Like, ideally, the more you learn, right, the bigger playbook you have. That way, there's always like some kind of setup brewing, right?
So your second strategy could be, for example, mean reversion on Forex, and your third strategy could be, for example, trend following on stocks. Why it is that important and so interesting for retail traders? Well, actually, it is very interesting even for us. We are leveraging this idea too. Why it is that important is because the more non-correlated approaches you are trading together, the more you are pushing Sharpe ratio higher, the more you are pushing the stability of your trading output. Because Sharpe ratio is profit or returns divided by volatility. And if you diversify, what you are doing is that you are pushing the volatility lower while pushing the returns, thanks to the compounding effect, higher. And this is last thing I would like to show you is how portfolio trading is working on a very simple example, if you agree, because people tend to think about portfolio trading the same way as about diversification, aka don't put all your eggs to the same basket, but there is one big difference. Let me show you. Because let's start with diversification. Let's say that we have 20K trading account. We have strategy 1. I will do it very simply here. And we have strategy 2, and we have some sum of both strategies. So let's say that we start in year 0 with 10K and strategy 1, 10K strategy 2. So the sum is our 20K. We just divided the 20K and we traded 50-50, both strategies basically. Let's say that in year 1, this strategy will make 100%, doesn't really matter. So from 10K, we make 20K, and strategy 2 will lose 50% of the account. So we would get to 5K from 10K. So the sum would be 25, right?
Yeah.
And now in the second tier, the strategy 1 would be losing 50%.
Oh, wow.
So we would get back to 10, and strategy 2 would make 100%. So we would again get back to 10. The sum
These numbers are so ridiculous. Like each strategy has a specific use case, right? Like that's it's set up. It's created for a certain kind of setup. So unless you're like misapplying it, you should not be just nuking your balance, right? Using the strategy.
is 20. What happened
And it depends what the market gives you, right? Like let's just say, like let's just look at this for example, right? Like in this time span, you know, you were just trend following, like long only trend following. You weren't trying to take some like ridiculous, like maybe sure on the lower time frames of some things you might have tried to trade, but not really in terms of shorting. But in regards to the strategies he's describing, like a lot of them you weren't going to be taking trades during that time span. It's just the market environment was not set for that.
here is that basically you made from 20, you made 25, and then you went back to 20 again in the second tier. You diversified. The volatility was lower because you could also end up with much higher volatility with one or the other strategy.
Yeah.
So you diversified your capital. But this is not portfolio trading. This is diversification only. What portfolio trading is about is that you are adding rebalancing there. And that's very important. In fact, portfolio trading, because of rebalancing, is the only really sand rail we have in trading. And let me show you on this simple example. We have again strategy 1, strategy 2, and portfolio. In first year, in year 0, we have 10K, 10K, so 20K portfolio. Year 1, we make 100% again the same. So we get to 20K with strategy 1. With strategy 2, we get to 5 because we lose 50%, so we get to 25. So this is the same. There's no difference. But what you do in portfolio trading, you are adding rebalancing, which means that if we started with 50-50 split between both strategies, you do it, for example, in this case, at the end of the first year. So you take 25, divided it again by 2, and you have 12.5 and 12.5, right? So you have still 25.
Yeah.
And then you don't do any changes in the strategies. You still trade the strategies as they are.
Yeah.
And the strategy 1 would lose 50%, so you would get to 6.25.
Yeah.
And strategy 2 would make 100%, so you would get to 25. So on the portfolio level, you would make 31.25. Same strategies, different approach, diversification only, diversification on steroids, aka portfolio trading, which is diversification plus rebalancing, and you would end up in the second tier with 31K, 31.25K.
Yeah.
And the only difference is rebalancing. Why it is working is because these strategies are completely negatively correlated, which means that if one is making money, the other is losing, and vice versa.
And could that be where some strategies, it might be the same, so say strategy 1 and 2 are both mean reversion, but they're being applied on, say, one's on crypto, one's on stocks. Would that still be separate strategies?
Yeah.
Due to the difference of the asset.
Exactly. You can call them really different strategies. It doesn't really matter if you are talking about it or thinking about it as about different strategies, but the output is less correlated or non-correlated.
Okay.
And that's the goal. Because portfolio trading doesn't make any sense if the strategies are not less correlated or ideally non-correlated. But if they are, this is the output. So that's why as a trader, as a retail trader, you should be trying to find some low sharp type of strategy, which edge tends to be as stable or as strong as possible. But you have one strategy with some sharp ratio. You have second strategy with another sharp ratio. But if you combine it on the portfolio level, the sharp ratio is growing. Why? Because you are reducing the volatility and you are pushing the returns higher. So that way you can basically, you don't have to rely on some very short time frames to get as much stability as possible. You can get out of the most crowded battlefields to something which is more calm, where the edge is a little bit thicker, where the expectancy is higher. The trading is basically simpler. And as you will be growing.
I don't know if this is the ideal approach for someone that's trading discretionarily. Like if you're like trading algorithmically, sure, but like ideally, you have not made your algorithmic trading in a way such that it is entering trades based on the algorithm strategy in an environment where the market is not supporting that kind of strategy. Basically. So like this kind of like huge drawdown should like not be occurring.
As a trader, and you will be adding more and more strategies. Your Sharpe ratio, aka stability of your trading output, aka returns, will be less volatile, will be higher, and can be as good as trading on small time frame because of portfolio trading.
Yeah.
And that was something I wanted to show you here because I believe that this is a concept which not many traders really properly understand.
I think so, yeah. I agree with you. And so if that was to continue, you would continuously rebalance. So is it a case where, say, if we did year 3, or in this case, would you rebalance here again and then do year 3,
Exactly.
so on and so forth?
Exactly. And this is simplified example
Because like here's the other thing about this, right? Is like you're rebalancing on some arbitrary time window. Like it doesn't matter what year it is, right? It matters what the market environment is. What if the market environment supports strategy 1 for 2 years straight? Why are you going to take money out of that to go put it in an underperforming strategy that the market's not supporting. So like a lot of like kind of things that don't apply in a discretionary world.
We can rebalance on the daily basis, on the weekly basis, on the monthly basis. It doesn't really matter that much. In general, the more often you are rebalancing, the better. But you don't have to overcomplicate it as a retail trader. The most important thing is
Fair
to
enough.
diversify and to rebalance and to trade less. Or
This
higher
is
number
what I mean. Like this video, like I don't know, for a lot of things you saying very subjective, but also like it's an hour-long video. Like you only get so much context out in that window, right?
strategies. Because this rebalancing is something which is reducing volatility and letting your returns grow.
Understood. No, I love that. Well, there you have it, guys. A slightly different episode, but one I think will build a foundation for all traders who want to think in terms of first principles in trading and also understand one, setting up a portfolio, which I found super, super interesting. and really
Not particularly interesting, I'd say. Not a particularly interesting video right there. Literally made a whopping 0 notes on that one. It's nothing to write about, right? Where's the music at? Boa? How's this up all doing? Bum, 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 bum. Interesting. Should we do? What should we do? I'll check out some of this data, right? We are all caught up on those videos. I don't know, those videos lately have not been particularly interesting, I'll say that. Like the last 2 ones that we watched, I literally made 0 notes for. It's like nothing to bother researching, nothing of interest. I've been 12.
Marcos trades, always prepared.
The math is the math. Golden pocket, stay sharp. Golden pocket, watch the wick.
Surgical logic, I'm in the zone.
Golden pocket, liquidate. Golden pocket, don't be late. Golden pocket, golden pocket, 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 pocket.
Wait for the math.
Wait for the entry.
Too easy. Golden pocket,
Golden pocket,
too easy.
golden pocket.
618. Surgical I'm in the zone.
Fibonacci, golden pocket.
Whoops.
Marcos trade. Always, always, always.
Dun, 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 dun. Forex. Interesting.
Floating over the Mediterranean right now.
Penthouse balcony, the closet at my feet. Sipping something vintage, yeah, the victory is sweet. Zaza in the paper, smoke dancing in the air. Watching candles move, but I'm already there. Exotic views, turquoise water in the distance. Living out a dream with zero resistance. I saw the level coming from a mile away. Now I'm just flowing through a golden hour day. 618. The levels looking like a ghost. Raising up a glass. Yeah, we gotta make a toast. We just floating through the value, yeah, we high. Watching all the numbers paint a picture in the sky. Lavish life, exotic views, the energy is clean. A masterpiece of logic in a
Fuck.
digital scene. The math is the math, keep the circle getting lifted. Everything is light, yeah, the
I have to go to the Spanish embassy on Wednesday. Fucking CPI day. Pissing me off.
flowing while the breeze is
Oh, why pissing me off?
remember wanting this, now I'm wanting more. Not for the greed, just for the peace of the soul. Trading from
Boy.
that was always the goal. Blueberry notes in the smoke, gas potent. Surgical with entries, keeping everyone focused. The laptop is open, but my mind is on the waves. Escape the 9 to 5, we no longer the slaves. High tier analyst, but I'm feeling like a king. Just a ghost in the machine, enjoying everything.
Everything is weightless.
Pretty chill into the month, right? After this inflation data comes out. Up until Jackson Hole, not a whole lot of particularly interesting things going on.
Value area high. Value area low.
What day is Nvidia earnings? August 26th.
We just floating through the value, yeah, we high. Watching all the numbers paint a picture in the sky. Lavish life, exotic views, the energy is clean. A masterpiece of logic in a digital scene. The math is the math, keep the circle getting lifted. Everything is light, yeah, the atmosphere is shifted. Too always prepared. High level vibes, digital soul.
Marco Straits.
Marco's trades. Believe.
Interesting.
I see them doubting when the screen turns red. Listen to the noise filling up their head. I'm looking at the auction, looking at the range. The logic stays the same even when the prices change. They want a magic trick, they want a lucky sign, but I'm just busy drawing out the 618 lines. Surgical execution while they're paralyzed by fear. The entry was decided long before we got here. You see the vision?
Interesting.
You're reading the tape or just the blog. Some people see the truth, some people see
It's a pretty important level to be holding, to be honest. This is going to start to look pretty suspicious if we start to lose this. Here's what these two fuckers end up doing. Bum, 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 bum.
The math is the math.
Marcos Trade.
I'm getting allergies or something. I don't know what the fuck is going on. I had the stuffiest nose the past like 3 days.
The math.
Exotic location, the water is teal. She's looking at me, I'm looking at the youth. 50 floors up, yeah, the balcony is wide. She's sipping on something, I'm catching the tide. You can flow with the island soul. Surgical entries, I'm in full control. Custom silk on, yeah, it's feeling like a dream. High tier analyst leading the team. High in the hills with a batting, yeah, yeah. Trading the value is a mad thing, yeah, yeah. Afrobeat bounce and the rhythm is right. We don't see the sun, we just own the night. The math is a luxury vibe. Inside the pocket, providing for the tribe.
Too easy.
Stars I smoke drifting through the ocean air. Hands on the curves while I'm watching the pair. 618 hit, now we're heading to the boat. Everything's light, yeah, we're staying afloat. Fashion and logic, the silhouette is keen. She's a masterpiece, I'm a ghost in the machine. Institutional flow, yeah, the volume is deep. Making all the profit while the world is asleep. Exotic life, surgical mind. The auction is balanced, avoiding a strife.
Interesting development.
Pockets. Global profit.
The math is the math. High in the hills with a batting, yeah, yeah. Trading the value is a mad thing, yeah, yeah. Afrobeat bounce and the rhythm is right. We don't see the sun, we just own the night. The math is a luxury vibe. Inside the pocket, providing for the tribe. Too easy.
Where's this thingity thing? Whoops. Whoops.
High off the profit, easy money. High off the profit, easy money.
618. The math is the math.
High off the profit, yeah, yeah. Easy trading in the zone. High off the profit, yeah, yeah. Blue sky, easy money. High off the profit, yeah, yeah, yeah. Easy money, easy trading. High off the profit.
Okay. 11:20. 10:30.
Marcos trades. Is it real? Or is it just the math? Midnight static, staring at the screen again. Midnight static, staring at the screen again. Watching shadows move where the trend begins. They call it luck, but I see the architecture falling through the noise. A silent director. I'm a ghost in the tape, drifting
Okay.
through the range. Everything I love is exotic views, but my eyes are on the tick. The world moves slow, but the execution's quick. Sides of smoke curling like a Fibonacci line. Living in the future, leaving all the past behind. Spaced out, floating in the value area. Digital soul, moving through the barrier. Melancholy money and the view is cold. Counting up the secrets that were never told. The math is the math. Why does it feel so lonely? 61-8 surgical. But I can feel the floor.
Any questions or not? Oh, it's signed though. Fuck, man. Fuck. Fuck.
Always prepared. Just a glitch, just a ghost.
Go to the mouth.
Ghost trades.
Marcos trades. They didn't believe. The math did.
Up at 3 a.m. with nothing but a chart. Just no one in my corner, only data in the dark. Through the levels, nobody was
Oh my god, it's funny.
studied ocean theory. While they told me it was fake. Call it screens illuminating everything I sacrificed. Every loss a lesson, paid a very
God, I cannot wait to go home. God damn. Partial. What's up? What's up? What's up? Not much, just chilling. What's up with you, my boy? Just making sure we're planned and prepared as per usual.
made it out the grind with nobody watching. Penthouse now, but remember when
I guess I could kind of make a little beeper through this list.
stepped on the vision. Cold execution, build it from the bottom. Every sleepless night is something they forgot about. Cold execution, math was my religion. Not a Bugatti sitting pretty, that's the only decision. They laughed at the screens I had made.
You know, some of these Chinese stocks low-key look like they're like bottoming, right? I mean, we talked about this the last time we streamed, or like on one of the last streams we did, but this thing is looking pretty interesting, right? Now it's like kind of consolidating here. I mean, does it end up going or not? We'll see. I'll definitely keep an eye on this thing, right? Take a little beeper on the lower time frames. Got a nice little trade yesterday at NY. Good start to the week. Yeah, I mean, I guess so. I'm not sure. Not sure what you did, but what kind of trade did you take? Because it was a pretty uneventful day today, honestly. I think Wednesday will be quite an interesting day. Wednesday and Thursday. Because we got the labor market data. Now the other half of the equation, or at least for now, what's the inflation data? What's the rate cut and rate hike probabilities now? Fed watch tool. Bum, bum, bum. How are the alts doing, by the way? Not particularly interesting. Well, this seems quite the interesting category. I mean, we've been kind of peeping this one for a while, right? Potentially, and the other thing about lighter that's interesting is like this might end up being like a way for people to trade perps in the US. Believe that like a lot. Oh, interesting. It's a huge jump, right? They made a deal with Anthropic. $9.1 billion deal with Riot Platforms, a Bitcoin miner that recently started selling AI data center capacity. What the hell is a 20-year contract? God damn. Interesting.
Tropical energy, digital precision. Marcos trades. Marcos trades.
Bum, 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 bum.
5 a.m. in the penthouse suite. Pixel perfect, feel the heat. Value area high, we plot the zone. Math is the king up on the throne. POC, the center of gravity. Trading on data, escaping depravity. You're lunging the wick, you're losing your head. I'm stacking the millions, I'm staying ahead. The math is the math. The math is the math. The math is the math.
The math is the
Watch it go.
God damn. God damn.
The math is the math.
Marcos trades. Check the coordinates. The math is the math. Yeah. Got him. Yeah. Santorini sunset love. Santorini sunset laptop on the wood. Yeah. Trading from the villa, yeah, the levels looking good. Yeah. Got a dark skinned beauty, she's a 10 out of 10.
Oh, they updated it again? Wow, they're updating usual whales a lot lately. Interesting. Interesting.
Time the candle closes, yeah, the work is already done. No stress in my spirit, no fear in my soul. Yeah. Just a pixel perfect entry, yeah, I'm in full control. We don't trade on feelings, we don't trade on hope. We just ride the volatility like a tyro. From Bali to Ibiza, yeah, the view is elite. Watching all the top longers facing defeat. The math is the math, yeah, the math.
7650.
Living my best life. Clearing out the path. Exotic locations. Getting
Interesting.
printing all the blue while we're dancing through the night. Easy money, baby, and a girl is divine. Levels on the screen and the hand is in mine. Yeah, we got him. Exotic vehicles parked out on the sand. I'm a global citizen moving through the land. Implied volatility, yeah, we sell it to the crowd. Blowing on that Zaza, yeah, the flavor is loud. Wall Street's hating, yeah, they're stuck in a suit. While I'm in a linen shirt eating fresh fruit. The math is a global language. Leaving all the emotional traders in damage. Global flow, math. Island glow, math. Target hit, math. Watch it bring. The math is the math, yeah, the math is the math. Living my best life, clearing up the path. Exotic locations, yeah, the energy is right. Printing all the blue while we're dancing through the night. Easy money, baby, and the girl is divine. Levels on the screen and the hand is in mine. Different time zone, same math. The math is the math. You get cut.
Gonna leave that like that.
Marco's trades. The math is the math.
I'll probably nerd out for a bit, y'all. A little bit of a nerd out. Also, how do we?
Can't get it out of my head. Midnight glamour, glass of the finest gold. I'm looking at the candles, watching the truth unfold. They tell me I'm obsessed, they say I've gone too far, but I'm just scanning levels from the back of the car. 618, the rhythms in my veins.
God damn. God damn.
Always planned, always prepared for the strike. I've got exactly what the market makers like. It ain't no fun if you don't cross the line. I'm hunting for the value, yeah, I do it every time. Did they tell you I might be out of my mind, or just the only one who left the noise behind? I got trading on my mind. The math is the math. Inside the value, yeah, the rhythm is divine. I got trading on my mind. Too easy. I got trading on my mind. Easy. I got trading on my mind. Skinny margaritas, but the profits
Gotta make sure our data is up to date,
against the wall.
right?
I'm way beyond the
Right or not right?
is flowing. The auction's in a groove. I'm already in position before the price can move. Zaza smoke is dancing with the strobe black glow. Surgical with entries, watch the liquidity flow. Luxury and logic, yeah, they're fused into one. The day
Yeah.
is beginning when the trading is done. Value area high, value area low. It's the only thing I see everywhere I go.
Well, interestingly enough, did that wick ever come over here? Was it? Oh, it didn't.
The math is the math. I got trading on my mind. The math is the math. Inside the value, yeah, the rhythm is divine. I got trading on my mind. Easy.
Marcos trades. Them naughty still. Zaza in the air, on the level them set. Level set. Pull the trigger up on the trade and no break or sweat. No sweat. Cushion my floating but the mark still sharp. Still sharp. 618 the entry, hit it right. Panama. Them a stress the charts and still can't read that thing. Can't read. We a vibe on the rooftop while the prophet sing. Half asleep at open bell. Position already right. Already. Close the trade by noon and book a flight that night. Book it. They a work so hard, then still I miss the move. We are barely trying and we still inside the groove. Hiding and the match still cold. Hiding and the story still told. Hiding, still low performing everybody. Load pot burning what we profit. Ain't nobody stopping we. Nobody. Them a cry about the market. We all laugh from the penthouse view. Hiding, the market don't need us sober to come true. Hiding, levels old. Hiding, watch it unfold. Got them at the top, got them at the low. Hiding, running things, that's all them need to know. Wall Street, in a panic, we are at the room service. Room service. Them up here for algorithms, we built us from purpose. POC magnetic, pull it back again. Value area I rejected, like we said it in. Jetpack ready, Bugatti keep on the table. Barely watching screens, but the execution stable. Them a chat for hours, we already knew. I am still more accurate than anything them do. Them a hustle hard, we a float easy. Mat so locked in. Nothing can breach with. Nothing. Load in the air, levels in the mind. Them a lose them cool, we just press decline. Marcos trades. Ike. Mark still sharp. Got him always. Marcos trades. Yeah. Check the tape. The map. Got him. Rolling through the city, windows tinted, moving slow. We don't shop to play, we just let the P&L show. Me and the gang in the lab, focused on the tape, while the retail's trapped, looking for a clean escape. Wall Street's looking at the order flow, scratching their heads. We're in the golden pocket, tucking top long as the bed. It's a unit, it's a squad, every entry is a strike. Moving as a shadow, tell me what that's like. They trade on the feeling, we trade on the grease. They're looking for a hero, we're looking for the leaks. Implied volatility, we're selling them the dream. While we're stacking up the blue, the elite level team. The math is the math, yeah the math is the math. We're moving as a unit, clearing up the path. Wall Street is envious, the haters feel impressed. Cause we're living lavish, put the numbers to the test. From the penthouse view to the exotic fleet, running the whole game, keeping it discreet. The math is the math, yeah, we got 'em. Ferraris in a line, yeah we move like a convoy. You're playing with your rent, we're playing with the big boys. Daters on our side, watching premiums decay. While you're short in the bottom, having such a bad day. The Zaza's in the air, but the focus is precise. Never ask the market.
I saw an interesting video the other day about some guy that was like doing analysis of his algorithms trading. Essentially, he was using moving averages to scale the size of the algorithm in terms of like the position sizing. So if it started to break below like key moving averages, like the equity curve of the algorithm, he was just scaling the size, which is pretty interesting actually. And if it broke the 200-day moving average, or the 200, yeah, like 200, I guess it'd be like 200 trade moving average, He just like shut it off. Like deemed it no longer efficient. But then he runs it in the background, like paper trading. And if it ever reclaims it, he'd like turn it back on. Found that quite fascinating. Bum.
From the charts to the ray. Yeah, we measure precision. Hit that level, then I peel. Stack so clean, look how it feel. Previous day, I get drilled. Caught that wick, not a bag. Real. Fibonacci in my scope. 618, that's how we float. They chase green, we just ghost. Matt too clean, yeah, we do the most. Ice cold, but the setup. Warm value area low, that's a quiet storm. Delta pop, I'm already on. One click, whole move, get gone. POC like a pressure point. Push that level, then flip the joint. Options, Greeks, I don't disappoint. Gamma pin, I break the joint. No guesswork, I laser in. Oh, I shift, that's where I win. They see candle, I see trends. Stack them highs, do it all again. Zero draw, but I still get rich. Stop loss tight, whole plan stitch. Chart look wild, I never flinch. They play hope, I play clinch. Hit that level, then I peel. Stack so clean, look how it feel. Previous day.
Gotta do the juice box here pretty soon. Damn. Yeah, this week is gonna suck. I have to do shit during the day tomorrow and Wednesday.
Enterprise, hit that level, then I peel. Stack so clean, look how it feel. Previous day, I get drilled. Caught that wick, not a bag, real. Fibonacci in my scope. 618, that's how we float. They chase green, we just ghost. Matt too clean, yeah, we do the most. Stack it, flip it, lock it, vault. They still guessing, that's they fault. We play edges, they play coat. I trade facts, no need to halt. Nah. The math is the math, Marcos. Marcos trade.
The math is the Strobe lights hitting, I'm seeing the tape. Calculated move, there is no escape. VIP booth, but the laptop's glowing. Institutional volume, yeah, it's overflowing. Surgical with it, the entry is tight. We don't chase the pump, we just own the night. Look at the wait, wait for the signal. Click, click, click.
I can't stop.
Trading on my mind. Trading on my mind. Trading on my mind. The math is the math. Too easy. Too easy. On my mind. On my mind. Always prepare.
Marcos trades.
Click, trade, breathe, wait, flash that screen, I levitate. Math move tight, I automate. Stack my profit, oscillate. Pulse check, candle flash. I don't chase, I calculate. Volume builds, price reacts. I move cold, never late. Night drive, Sims hum, POC my dinner plate. Eyes low, trade sharp, in the zone, meditate. VWAP touch, trend, bend, double top, I mark the end. Market breathing, I pretend to a slow leak. In the tape, I find the sneak. Exit hit, I don't repeat. Pulse check, candle flash. I don't chase, I calculate. Volume builds, price reacts. I move cold, never late. Night drives, Sims hum. POC, my dinner plate. Eyes low, trade sharp. In the zone, meditate.
Volatility hit. Let's ride it out, baby. Marcos trades. Volatility hitting. Shots go wild and the profits lifting. Targets that we missing. Back-to-back things, second digits. Bulls and bears, they spinning. We just dance for the candles, winning. Touching sounds in the mix. Every zone hit, feeling rich, so rich. Price moving like a strobe in the dark. Set that fib, not a chart, hit spark. Wrist tight, interest clean as silk. Profit pouring in like milk. Got two phones, both on ping. Hive all day, yeah, let it swing. Hit that gold, then let it bounce. I'm out the wick, now run the amounts. It's up, it's lit, we ride the tide. Late night trades with that moonlight vibe. Every tick feel like a winning. Volatility got us grinning. Volatility hitting. Shots go wild and the profits lifting. Targets that we missing. Back-to-back things, second digits. Bulls and bears, they spinning. We just dance for the candles, winning. Ching sounds in the mix. Every zone hit, feeling rich, so rich. Flashing like a summer rave. Math precise, we ride the wave. Targets kiss like lovers meet. Profits stacking on repeat. Volatility hitting hot. Dancing through them sniper spots. Entry fire, exit clean. This a life the charts don't mean. Volatility hitting. Stack it high while the bots be slipping. One more zone, then we dip. Trade so good, made the charts strip.
Yeah. Slow cruise. High stakes. Fam only no outsiders. Marcos.
I think I might have bought the wrong mouse. Am I looking this up right now?
Numbers on the screen stack clean, now we double that quick. Money in the air still cool, we don't flex for the pigs.
They got a Bluetooth and a non-Bluetooth version. I don't know what the difference is.
Price tags loud. Penthouse view when we move through town. Charts in my hands to the coupe top down. Only real ones here, whole gang get crowned. Bids in the zone, we don't chase that hype. Let the crowd run wild, we just snipe on sight. Profits on tap, every day feel right. From the block to the charts, now it's first class flights. First class. We trade with the gang, move silent, but they loud when they hit. Numbers on the screen stack clean, now we double that quick. Double. Money in the air still cool, we don't flex for the pigs. Every play lined up, locked in, whole fam too slick. Eyes on the prize, but my shade stay dark. Cut through the noise like a blade through bark. Whole gang sharp, every move leave marks. Money stretch long like we pulling up arcs. Whoever move sloppy, play stay crisp. One wrong step, then you off the list. Trading game cold, but we built for this. And the fam gon' eat every time we hit. We trade with the gang, move silent, but they loud when they hit. Numbers on the screen stack clean, now we double that quick. Money in the air still cool, we don't flex for the pigs. Every play lined up, locked in, whole fam too slick.
Zoom in close. Price tab clean like a kiss. Marcos. Pixel perfect, click that zone. Trade hit sweet like a borderline sign. Late night setup, candles glow. Price come flirt and steal the show. Hit my line, then gone like poof. Sharp like art, that's Marco's proof. Pixel perfect, click that zone. Trade hit sweet like a tone. Tap my line and flew, we gone. Profit chart looking full blown. Line so sharp, they slice right on cue. No dice, map so clean, precise. Entry lock, that's nice. It's not luck, it's legacy. Snipe so smooth you think it's cheap. Golden zone, exact degree. Pixel perfect, entry sweet. Pixel perfect, entry sweet. Pixel perfect, entry sweet. Pixel perfect, entry sweet. Pixel perfect all day long. Trading look like my theme song. Screenshots glow like neon. Hit that mark and we move on. Line so sharp, they sight. Precision wins, it's life. Sipping tea with you so nice. Chart hit clean, that's life.
Yeah. Map. Stats. Data. Woo. Marcos. The math is the math. I don't do guesses. Nope. Lambo mad black. I draw it presses. Girl Scout smoke. Cookie chart got blessings. Blow. You chase green dream. I chase addresses. Stats on deck, static clean. TP tag like laser beam. Penthouse top with the trading screen. Zone get touched and split the scene. Draw that fib, let price extend. Third touch hit, you wanna send. You went long, I fade that in. One click now, I press that send. Out of my face like a Chinese wick. I don't blink, I don't flip quick. Your chart loud, my math stick. I don't pray, I just pick. G5 jet for the weekend swing. Script on lock, let the algo sing. Exotic pack is the GSC. Roll up loud while I press TP. The math is the math. I don't do guesses. Lambo mad black. I draw it presses. Girl Scout smoke. Chart got blessings. You chase green dreams. I chase addresses. Stats on deck, stat clean. TP tag like laser beam. Penthouse top with the trading screen. Zone get touched and split the scene. I got numbers, they got nerves. They hold by us, I observe. I sit pressure in ocean curves. While your trade wreck, I just swerve. Line so light, it still got hit. Wick tapped in and made that flip. I don't need 5 monitors lit. One clear edge,
Okay.
and I'm rich.
I think it should be good. I think this thing should be good. What's cooking over here? Still fucking around doing nothing.
Stats. John. Tag. TP. Gone. Bad. Secure. The math is the math. The math is the math. I don't do guesses. Lambo mad black. Smoke. Chart got blessings. You chase green dreams. I chase addresses. Stats on deck, static clean. TP tag like laser beam. Penthouse top with the trading screen. Zone get touched and split the scene.
You thought it was luck. It was math. Again.
Marcos.
You're gonna wrap up one more thing here, then we're doing the juice box and we're out of here, boy. So you guys got any questions? Anything you want to yap about or no? Or no? We're not. We're not.
Yeah, we see you. Oh, you thought it was up? Yeah. Top longest cry when the chart go drop, drop. We get profit while they beg it to stop, stop. Pop champagne 'cause we
God damn. God damn.
club while they watch pass flop. Yeah. Top longest cry when the chart go drop, drop. We cash out, then we spend non-stop.
We're not. We're not. Where's my water at? Boy. Fucking thirsty as hell. Questions, are you guys planned and prepared? Or no.
Saw him on Twitter screaming new ATH. Next thing you know, candles looking all gray. Me and the crew had the shorts on deck. Now the DJ playing while we run up checks. Bottle girls bringing that profit and ice. They pray for a bounce, but the math ain't nice. I just wink when the crowd get loud, cause we taking over charts in the dance floor now. Yeah, top longest crowd.
Because I am planned, prepared, ready to go. I'm not just talking about this trading shit either, boy. Boy? I mean, in terms of the juice box, not gonna be particularly interesting, right? What's the hotkey for this? Hmm. Yeah, if we don't reverse him here, that's going to be like, you know, last stand for the Bulls. Better tap this thing and reclaim the value here low pretty quick. I was looking pretty fucking suspicious. Pretty suspicious to say the least.
She don't move for love. She moves for numbers. Golden entry.
Out of curiosity,
Marcos. Yeah. She arched like the fib retrace. Golden pocket, I find that place. Her body math, no room for waste. I trace slow, she matched that pace. She bounced back like a open 5 move. EMA touch, she slipped, she groove. Stop lost tight when she let me in. I risk it clean, reward been sin. Eyes on the chart, but she moaned my name. TP hit when I grip that frame. No emotion, just the game. But she come fast when I mark that range. Golden entry, she ride that wave so sensually. Golden entry, she
yeah.
close when she hit TP.
Interesting zone coming up there to say the least.
She roll her hips like price for me. Golden entry, all this math make her lose belief. Risk of fine, we played that dance. She split that spread in red silk pants. One candle fake. She break then trap then throw it back like she run that map. She don't beg, she calculates.
Bum, bum, bum. Bum, bum.
I press with calm, she activate. Now we both deep in that pivot state. She don't talk, just signal right. She set that level, I click all night. Trade her body with trailing might. And close it clean before daylight.
Any questions? Or no? Or no? Or no?
Essentially,
Or no?
she pulled me close when she hit TP. Golden entry, she rolled her hips like price for me. Golden entry, all this math make her lose belief. She said don't stop till the chart complete. I said girl, this is price technique. No romance, just trend and heat. She said trade me, not treat me sweet. Golden entry, she bounced that move so militantly. Golden entry, she chart my name like symmetry. Golden entry, she wicked that dip then ride for me. Golden entry, I make 'em moan, the math is the key. Golden, precise, calculated love, just math, Marcos. Yeah, they try to short the bottom. Back call, baby. We
Ba, 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 ba. I guess we do have one more question, right? In terms of the higher time frame. Yeah.
Numbers drop, bass drop, beep 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 beep, baby, beep 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 beep, baby, EPI, drop that heat, market jumping on the beat, green wave flowing through the street, bag so full, yeah, it's looking EPI, make it move, candle flash, got something to prove, big board profits, that's the groove, Marcos trades, yeah, we never lose.
Also, in terms of the stream, actually, I didn't realize. Yeah, no frames dropped. Interesting. It never changed the server either. Interesting. So far, so good, I suppose.
slow, charge glow. Yeah, yeah. Fam good, whole table, eating. All nights, turn a lifetime. Cold charge, but the place stay heated. Took the risk, not a mission completed. Fam good, put the stress in the past. Every move, math sharp like glass. City lights blur when the bins go fast. Made it out the lows, now we built to last. Woke up in silk sheets, rain hit the skylight. Used to pray for a break, now it's highlight. Mom's tears turn gold when the trade's clear. Now the fam overseas with the waves near. Precision in my blood, every entry surgical. Turn the pain to a game, now it's purposeful. I see the stress fade every time they smile. All from a chart and a little exile. Yeah. All from a chart and a little exile. Yeah. Fam good, whole table eating. Long nights turn a lifetime feasting. Cold charts, but the place stay heated. Took the risk, now the mission completed. Fam good, put the stress in the past. Every move,
Are they gonna save it? Are they gonna save it down here or no? Or no? Okay. Shit is basically done. I think we're ready to start wrapping shit up over here. I think we are a Gucci. Time for an updated juice box, yeah. Potential loans. What's the tricky one in terms of the long, right? Because like all the low time liquidity like was down here, and I got it right. So like, if you got filled, well, you would have been in this thing at this point. Like the next question is like to the upside. Like, does it flip this zone up here or no? Or no? Problem is, quite late, right? Like ideally, you want to like if it's gonna reverse, it's gonna top the zone and go lower, right? It's kind of like bouncing yesterday's VWAP, grab the local liquidity and reverse. And if you wait to like flip this to get into the long, then we're like right in the fib zones, right? Like another spot quite likely to reverse. And this also is not like the greatest low left behind, right? So like, sure, can you like, entertain this perhaps? Fucking mouse, man. I can't wait till this new mouse comes in the mail. Sure. But like,
Cruise through the city with my gang in the back. Orders in the system, yeah, we run it like that. Every candle measured, every level on track. One signal drop, whole squad react. We don't talk loud, now we talking the math. Every point precise, like we cut with a
it'd probably be your best bet, right? Honestly.
bear try step, he gon' leave in the past. Yeah, trading with the gang, we don't miss no play. Slow roll, win, stack racks all day. Yeah, move so
Especially if these two start going.
West Coast cool, while the charts still sway. Trading with the gang, we don't miss no play. Never levels hit.
Yeah, let's get rid of this thing for now. Let's just not worry about this over here.
We just count up while the rest gon' pray. Hands on the wheel, mind locked on the zone. Market in my pocket, whole trend I own. Each pullback, yeah, that's a step to the throne. Entry so cold, it could chill your phone. Never rush moves, got the patience built in. One green flash and a profit locked in. Squad all sharp, yeah, the circle all win. Math on the board, that's the code we in. We don't miss no play. Slow roll, win, stack racks all day. Move so clean, they just watch, can't say. West Coast cool, while the charts still sway. Trading with the gang, we don't miss no play. Never levels hit perfect, watch the candles obey. Marco's in the cut, real calm, no spray. We just count up while the rest gon' pray. Yeah.
Is this the case on every exchange?
Cool moves, cold math. Gang eat together. Always.
Yeah. Whole gang lit. Bags heavy. Marcos, let's ride. We in the charts with the crew that's fat. Stack so tall, yeah, don't collapse. Lights on us while the beat goes slap. Every tray hit, none of bottles get cracked. Gang in the spot, we ain't missing no play. Money keep dancing like it's on replay. Hands up high when we run that game. Profits go wild when they hear our name. Deep in the zone, but we still gon' vibe. Tray flow heat when the club get live.
I'm gonna check in like the CBD on all this stuff. I'm curious if this is happening on every exchange or not. Like on the coin margin contracts, like definitely interesting activity going on, right? Say the least. Okay, it is on all of them. Interesting. Yeah, I mean, on the coin margin contracts, there's definitely some absorption around the CBD, right? And in terms of just like the regular perps on Binance, like you're seeing like a lot of absorption down here at the lows too.
More risky. Math in the clip, lifestyle 50-50. Yeah. Charts look calm, but the waves still deadly. High stake plays, every entry feel edgy. Cold eyes stare when the numbers turn heavy. Ice on my neck, but the trigger
Boom, 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 boom.
no sheep. Yacht life days, but the grind don't sleep. High leverage shots, they gon' feel that heat. Price at my line, that's $1 million a week. We move risky. Math like a drum, let it hit me.
Up to you. This might be the ideal entry. If you're gonna bet that we're gonna hold this zone, Like hold the last week's value area low. Hold that like this both on the TPO and the volume profiles. After we grab all this liquidity and start to go. Like this is gonna be the low that holds, right? So you can structure your risk off of this low and aim for the higher levels. I'd probably be shaving some here just in case starts to reverse at this point. You are gonna get in on this. But yeah. If you're not gonna entertain this. Probably gonna be if we reclaim the zone up here, right? Like if we don't tap the zone and go lower on the liquidity grab, and then it flips this area. Probably gonna be flipping that zone. And if not, then like there's the two downside options, or really one, because we've covered the lower ones. But yeah, this is like the next low time frame zone. A lot going on here as well, right? Like the single print will be down here, the poor low will be down here. This is like the low time frame liquidity. Plus there's like the naked level down here. Boom, 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 boom. And it is like the POC of this like next volume node, right? But suspicious, because at that point we're like starting to reject again from like this value area, and we're like losing the value area high here and losing the POC. And we know what's up with these higher time frame levels, right? We have talked about this lower stuff for a while now. We'll kind of we'll start off with the usual stuff, right? Higher time frame plans discussed in previous streams / Discord. It's continued to be the same, given that we're still ding dong in this like 65 to 60k range for the fucking Lord knows how long now. We'll kind of leave that written for the shorts as well. Where'd it go? Oh, the fuck. We gotta start wrapping up here pretty quick. Boa. It's up to you how you want to take this. Like ideally you were in on it, getting filled on the grab with this naked point of control. So like now it's risky, right? Because the problem with like this, like I'm very hesitant to suggest like getting this kind of thing going. Because it could end up just doing this crap, right? Just kind of makes like a flag, then just breaks lower. And we are spending a lot of time down here so far. So you're gonna have to kind of wait for yourself, right? Did you value like the absorption and exhaustion that's showing up on some of like the lower time frames down here enough to risk this? Knowing that we might reverse right there as well. Up to you. Personally, I probably wouldn't. I probably would have been looking to get filled on the whip with limits. Or I'd dabble with like a really small position size kind of thing. Bum, bum, bum. We'll kind of just say like, kind of the structure change down to the current price levels. Three, like flipping PD value area high / the yellow line kind of thing. And this like lower zone that we just talked about. Dun, 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 dun. Probably gonna be your best bets. Boom, boom, boom. And for the shorts, The short is sketchy. The short's gonna be quite sketchy because like one, like this was like a pretty good opportunity up here, right? There's like multiple different entries you could have attempted up here. Whoops. Because the other thing about this to keep in context from like the last time that we streamed is like we were talking about how there's a bunch of shorts that were down here, right? Like this whole time we are talking about how shorts are opening at the bottom of the moves, then like closing out break even on the way back up, so they weren't getting trapped. But like now there are shorts trapped from down here. So like even with this move down, these people are still underwater. And earlier in the stream, we were talking about like this one candle, right? There's like a bunch of shorts open right on this fucking candle. And literally fucking bottom tick the short. So like they're underwater now too. And if we start to run off on them with these people all down here trapped, little sus. Little sus. Like I don't know if I would be too keen on grabbing upper levels. Especially given you'd be expecting to rotate back, right? Like we tried to go, like we opened, tried to go above last week's Valeria high, rejected, then came right to the low, and now we're like holding the low, potentially starting to flip the POC back, so we might just end up rotating all the way back up. So like, do you want to entertain it here and here? A little suspicious. So like the higher time frame one is definitely gonna be the best bet, right? The same ones we've been talking about for a while. These like higher zones. These will continue to be like the best, the juiciest opportunities. And he missed a pretty good one here. That's the other thing. Tricky. Because like, sure, can you potentially entertain the bearish retest of the zone? Sure. But like, very risky given the context we just talked about the open interest. So like maybe you can let it come up to these zones, and then like as the VWAPs are coming up to print, then it starts to like break down, loses the VWAP. Then you can look to entertain it and like structure your risk off of that, or just like at the VWAP for like a really tight stop. And the other issue with like taking these is like this shit, right? Like if this starts pumping back to all-time highs tomorrow and this starts to break out towards the highs, like what's the probability of Bitcoin just fucking rolling over while that's happening? Not nearly as high, right? So yeah, pretty risky dabbling in a short in here right now. But if on the contrary, right, suppose these do start to just like kind of break down a bit for whatever reason. Obviously can't predict the future, but who knows what kind of news or whatnot comes out tomorrow. Makes that the idea a bit more realistic. At the end of the day, these things don't have to be perfectly correlated, right? So they can just like break correlation. But more often than not, that they are relatively correlated.
Marco got the levels mapped out, that's facts. Fibs on chart, I'm loading at the cracks. 6-6 tap, I double my stack. Ops all green, then it all went black. Golden bounce, price come dance. Hit that field, now I'm in advance. Entry sweet like a late night text. Wit touch deep, now the chart say bless. Golden bounce, hold it.
Yeah. Yeah. I don't know if I'd be too keen on entertaining these lower time frame shorts, to be quite honest.
I don't flinch, I don't blink when it hit. 702, I'm sitting in a pit. Trap line hidden, tag that price. Order get filled, chart looking nice. I might ladder from the 6-6 clean. Then that more down to 7-8 mean.
We'll say this. We'll like kind of say if you are gonna entertain this, like probably wait for like VWAP gets lost. Plus like ideally some kind of price action that like supports it. So strong EA pattern plus the flows. I wouldn't be putting limits up here, I'll say that. Personally. Y'all can do whatever the fuck you want to do. I would not get in front of a potential moving train. If anything, it's gonna be the VWAP thing that we talked about, where like you like let it come tap it and then it like loses it and goes lower. I was thinking, is there a world where you want to entertain it down here, like something like this kind of thing? It's fucking most. Probably another option, right? Just kind of like toss on my anchored VWAP from the top up here, and then depending on how this thing's starting to come down, you can kind of play it with the volume node and get like a bearish retest in the zone somewhere before we start to break like the lows on the higher time frame. Probably gonna be the better bet, right? Either gonna be the higher time frame levels up here or something like this. Probably be the best bets. We'll kind of just say bearish retests into the Valeria low of volume plus the anchored VWAP. Something like that. And other than that, all the higher time frame shit remains unchanged, so you need to get caught up with that to do it. We have covered it many times. Get rid of this, get rid of this, get rid of this, get rid of this, get rid of this. Bum, 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 bum. That should cover it, right? It's kind of enough ideas to hold us off, at least in regards to Bitcoin. Yeah. That should do it, right? Time to kind of wrap things up. Prepare for tomorrow, get a good night's sleep. In terms of the stream, I have shit to do tomorrow during the day and Wednesday, so not going to be daytime streams either of those days, but we should be good for the night stream. Thursday, definitely not. I have plans. And then I think I'm gone by Friday, so quite likely tomorrow and Wednesday will be the last streams. Probably for the rest of August, to be honest. My birthday's on the weekend, and at that point, it's the middle of the month. And then I get like my dental implant finished the start of September. So like no point in like going home, then coming here for like a week, and then going back to Toronto again. It's just like whatever. Might as well just stay there, right? Because like I have like a bunch of plans that are set there already. So yeah, we'll kind of try and be here tomorrow and the day after, just to have like a bit of longer streams like today, to nerd out on whatever we need to nerd out on. Make sure we leave things planned and prepared so everyone knows what's fucking good, right? But I haven't had nobody in here bitching about getting fucking liquidated, blah blah blah. Bitch, I laid out the plans for you. What more do you fucking need, boy? What do you fucking need? I want me to log into the exchange for you and start taking the trades? Goddamn. Goddamn. But yeah, that should do it for now. Not too much else to yap about. Curious to see how this thing turns out, right? The other thing about this too is like we're in a pretty risky spot. Like that's why we called the stream today the waterfall, because like we might get another one of these on the way down, right? Ding 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 ding, and then there's the because like chess, there are a bunch of shorts that we talked about that are trapped, but there's a lot of longs that have been opening this whole way up. And like we just saw that these ones all just bitched out today, right? As soon as we started reversing, they're all just closing out. Ding 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 ding. So same thing might happen here. And we have like a bit of like a volume void here, right? So yeah, be careful, right? But don't get caught up by the volatility. Don't get caught off guard. Especially in the higher time frame, right? Like everyone's talking about this as a low, blah blah blah. They very quickly forget how quickly we can start printing dildos to the downside. So especially given like the compression we're seeing, right? Like we are getting to pretty low volatility right now. So move is coming. Move is coming. That should do it for now though, right? I think we're all planning and prepared for now. And we're planning and prepared for the higher time frames. If you've been following along, you already know what's fucking good. Yeah, and you're already in trades from higher and lower. So you didn't even gotta worry about taking trades because you're already in them with your boy. But anyways, I'm out here. I'm calling it a night. Let's kind of see what's good in the chat before we bounce. Shout out to Bobby Lamb. Shout out to Tokyo Two Step. Shout out to Harshal. And yeah, we'll be back tomorrow, kind of usual time. I'll try and be here kind of like the same time as today, like 8ish or so. Basically when the daily candle rolls over. I'll be back on the grind. Till then, I'm out here. I'm tired, boy. I'm trying to get some good night's sleep. Later. 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 Later.